Good evening, ladies and gentlemen. It's your boy Shao King, and I'm back with another video. In this video, I would like to speak about a few, common things in forex trading, like support and resistances, and how they can help you change the game, your trading game actually, and how you can simplify your trading with support and resistances. But before I begin, I would like to make an announcement, and this is, if you look on the left hand side of the screen, I'll be adding my new Instagram profile. If you are watching my video, please like and subscribe to my YouTube channel, and also do not forget to follow me on Instagram to just follow up on my life as a trader there as well. So to begin with, we're going to use the rectangular tool to draw a few rectangles on the chart. So basically, this rectangle, we're going to use it as a resistance. Okay, so we can call this resistance. Okay, and then we'll do the same at the bottom. All you can do is just clone it and then drag it to the bottom, and then we can name this as support. All right, now remember that support and resistances actually serve, as a roof. Resistance can serve as a roof, and support will serve as the floor. So basically what this means is that these levels are barriers, but they are not static barriers. Okay, they can be broken. All right, the same as the ceiling in your house and then the floor. So you can go through the ceiling, right? You can break through it, and the same thing applies. You can break through the floor support. So when price is within these areas, this is the where we have to maintain our focus at. So when price is at a support level, let's say price is coming from an up move, right, all the way down to our support, a few things can happen down here. All right, a few things can happen here on the support level. All right, option number one would be price would bounce back up to resistance. All right, that's option number one. Now, if you're the type of trader that expects price to bounce off option number one, okay, you can take a buy. All right, you can take a buy. Let me just write buy here, it's difficult. Okay, so you can take a buy here, but there are conditions for you to take a buy here, and one of those conditions is that you need a candlestick. Okay, candlestick confirmation. All right, you need a candlestick confirmation. Now this, you would have to look them up as well, right? So bullish, bearish candlestick confirmations, and so on. What I'm going to do is I'll make sure that I leave some of the few material that I have here, like the candlesticks confirmations, the candlestick patterns, and the chart patterns here that you can use in these scenarios. They'll be in the link. Okay, I'll leave the links in the description. Sorry. And also, before I continue, I'd like to make an announcement. If you're looking to trade with a really good broker, guys, in the 21st century, you're trying to trade with a really good broker, please do not hesitate. Click on the link down below, subscribe with the broker, open your account, get verified, and start trading today. If you're looking for trading signals, click on the link down below as well. Join the Telegram channel and start getting trading signals as well. And if you're looking to to get some extra support, like I can say mentorship, you want a private course, you want to be accompanied by me, by the mentor, you want to be in a private space and just do more than you would do normally, you can also contact me. I'll leave all the details in the description of this video. So moving on, remember that if you take option number one, you need candlestick confirmations. If you take option number two, all right, so option number two would be similar to option number one. So we would have price coming all the way down, support, and then once it reaches here, price breaks, retests, and then moves. Now, the most important thing that needs to happen here, that you need to watch out for, will most likely occur somewhere around that level. All right, so somewhere around that level is where you are expected to find an entry. All right, let me just leave this. Okay, so somewhere around that level is where you're supposed to get an entry. Now this entry must have enough force to break the structure of this level. All right, so we need a break of structure of this level. All right, basically whatever happens here, in most cases I would say look for a doji, or look for a top wick candle like this. All right, look for something beautiful like that. So just make sure that your candle has a wick. Okay, so what this actually means, what this actually means is that you want a candle with a rejection. All right, somewhere around that level. All right, you want a candle with a rejection somewhere around that level. Now when price rejects, it means that price was going to the upside, but we didn't have enough bearish momentum to keep price, bullish momentum to keep price going up. So in that case, price failed to move up, it rejects, and then it forms a bearish candle with a wick to the top side. Now if this happens at this level, you're good to go, but make sure that the candle that opens here breaks structure or closes. All right, closes above this level, and then the next continuation will be like a bearish engulfing candle. You can then take your trade like this. All right, you can take your trade from here, stop loss just there, and then you calculate your risk to reward accordingly. So this is what support and resistance levels can serve. The best strategy you can use here is the breakout and retest. Okay, I call this the BNR. All right, breakout and retest. This is the best strategy, or you can call it a bar or whatever. Some people would say bar, right? So this is the breakout and retest strategy, just so that you guys can remember the breakout and retest strategy. Now if I have to clear all this, right, let me just clear all these drawings. Okay, if I have to clear all of this and just make it beautiful enough, this would be the case. All right, so we would have price moving from resistance down to support, and then once price is at a support level, we can expect a bounce up. Okay, so we can expect that, or we can have price, option number 2 here, coming all the way up from support, resistance, going down to support, and then breaking, retest. So let's do the same thing for resistance. So based on price moving from bottom to the top, okay, from support to resistance, here you can expect 2 things. If price is weak and you get a bearish candlestick confirmation, you have to sell. All right, this is okay. And then the second option would be price moves to the upside, breaks the structure, and then retests and continues. All right, this entry here at this level is called a retest. Okay, so price broke the structure, came back down, gave us an entry level. Okay, so price gives us an entry level, and then we take the trade somewhere around there. Okay, somewhere around this level, you take a buy here, and then here you take a sell. Okay, same thing, it's just the opposite. Okay, please remember this is a basic example of how to use support and resistances. Now the most important question I'm asked oftentimes is, how do we place it on the chart? Now let me erase this. Remember that we have wicks. Okay, so let's say this is our candlestick, right? And then the candlesticks have wicks. All right, candlesticks have this, that's a wick, or a shadow, whatever you can call it, a shadow as well. So this is the candle body, this is the shadow. Now if you're going to go on a lower time frame, the wick on the higher time frame can end up being a body of a smaller time frame candle. All right, remember that. But I prefer to use the body, okay, because the body indicates exactly where price opened or where price closed. Okay, remember that. So because the opening and the closing of the candles occur at the where the body is, where the real price information is, so this is real price and this was where price was. Okay, so normally this is past, okay, and this is the present result. That's how it ended, okay, the actual result. So this could be what happened due to volatility, due to spread increasing, due to a change in momentum or in volume, and then it wicked, and then you remained with the closing of the body in this way. So it's best that you mark, okay, the levels first with your horizontal lines. All right, you mark your levels first with your horizontal lines, and then once you have marked with your horizontal lines and you just want to be sure that price should tap into those areas, then you can use this, okay, your levels or your zones. You can call them zones. Okay, make sure that you include the weeks, so that now what you're saying is that if price should move into those areas or tap into those areas, you know exactly that that's where you're supposed to look for buy downside. All right, so always do it like this. This is Euro USD. Let me just erase everything and then we can do a quick technical analysis here. So we're on Euro USD. Let's go on the daily time frame, for example, and here we are on the daily time frame, and we have a very good example. Okay, so we are on the daily time frame, and yeah, this is actually okay, but let's try weekly. That's okay, but let's try weekly because I want to have the candles as visible as possible for you. Okay, so this is a perfect example. Now we are here. I already spotted my the highest point visible to me. I won't choose those ones. I'll use this one, the most recent high point, and then the lowest point is here, but I'll use this area. So what I would do normally is I would get this, right, because I don't use the horizontal line, but you can use it, or you can just use the horizontal line. Grab the horizontal line and then click on it. So this would be my resistance, but because I have a wick here, as you can see, and also 4, but then there's 5, 6, and most likely 7, 8, 9, 10, 11, and so on. So this area was tested a lot, but since I'm only taking this area as consideration because that's what is visible to me now, I can then mark the area of support and resistance, for example, like this, right? So the resistant area, I can do this because I want to include the bodies and the wicks. Okay, this is how you can do it. And then when you come to the downside, you can also do the same. All right, you can do the same here. Get your horizontal line, place it around that level, grab it, make sure that you include your wicks. You can just start somewhere here, it's okay, it's not a problem. Right now we had a bearish candle here that actually broke through our level, right? After that we had a bullish candle, all right, and now we're having a candle that's rejecting. If this current candle here closes the way it is, okay, this candle will close in 3 days and 4 hours. If it closes the way it is, we will most likely be waiting for a candle that will then engulf to then come back and retest before we take it, or the next opening candle we can take our buy positions and then our stop losses will be here, something like that. All right, so this is how you mark your zones on TradingView. And what you can do is you can do this, you can buy to the upside, or you can wait for price to do this and then you can sell to the downside. All right, this is the best way you can trade breakout and retest, guys. This is the most simple strategy. So I hope you like and subscribe to the channel. I thank you for your time. I know it has been a long time since I recorded a video, and I hope that this one sticks with you. I'll make sure that I include all the links and I include all the necessary information that is required for you guys to follow. Stay tuned for more. We're gonna record more videos, and let's keep moving.